what we saw was in the world's best economies, you're losing 15 to 20% of your economic value in the currency every year. In the second tier economies, you're losing 30% or more. Like the Japanese yen is down 24% against the dollar in the last 12 months, right? And in the tertiary economies, you're losing 50, 60, 70% of the value in the currency. And their demand is give me my own money back because the government stole the money and the banks froze it, devalued it, and they're going to give it back to you over the next 17 years, devaluing it 20% a year while they trickle it out to you. What we've got is the 60-40 models are broken. Conventional ideas like, oh, I'm just going to store my value by buying property, that's kind of broken in a lot of places. People are losing faith in just investing in property when you see the gyrations of this property. If you think about the paradigm shift when automobiles arrived, there's the famous snapshot in New York City where, there's just a bunch of horse and buggies, and 10 years later, it's all cars. And in that 10 years, you adopted it. And I remember, standing once on the Pantheon and, or on the Acropolis, and I'm like taking a photo and about to post it. And I think to myself, what's different about this? And I think, well, last time I was here, maybe a decade ago, I had no smartphone. I had no iPhone. There was no Facebook. There was no Instagram. You couldn't post it. There were no, digital photography didn't exist. So a decade goes by and you're like, you're trying to remember, you remember back in college, I went to college, we didn't have laptops,
Yeah.
So when I was in college, there were no laptops. And I thought, well, what if I'd had a spreadsheet when I was doing engineering? I went with an HP 15C calculator, and we had notebooks, and we wrote down 20 pages of calculations in a notebook with the calculator. And I remember seeing people saying, well, you got a calculator? We use slide rules, and you fast forward a decade and people have laptops. You fast forward another decade, they have internet. You fast forward another decade, they've got YouTube and simulations. And now you're starting to question whether or not you even needed to go to college at all. Every decade, there's some profound paradigm shift. And the thing that hits you about a paradigm shift is, it's such an out of the blue idea that no one can conceive of why you would even want it. So, it took a while before people thought maybe radio waves have a place, right? Or maybe electricity has a place in the world. And why would I want a railroad? But I think now we're staring at this paradigm shift of digital energy. And why would I want to move a block of $1 billion of something from point A to point B through cyberspace in a split second with instant final settlement, right? Initially, if you roll the clock back a decade, we didn't have it. Every financial crisis we've had, right, in the history of the world, and we've had 10,000 of them. There have been 10,000 currency collapses, from the Lydians to the Athenians to the Spartans to the Romans to the Venetians, to the Brits multiple times, to the Carthaginians. You could just go on, and the Persians, and go on and on and on and on. And the history is full of examples of an empire rises, someone mints a currency, the successors or the children of the conqueror debase the currency, the grandchildren debase it more, the great-grandchildren forget how they actually got the power, they spend everything, go wacky crazy. Pretty soon the economy collapses, you can't pay your soldiers, they all defect, and the barbarians come over the gate and they take everything, including your debased gold, they melt it down, they purify it, they mint their own coin, and the cycle starts again. That's literally taken place 10,000 times. That's the history of money, and that's the history of economics. Along comes Satoshi, and we've got the white paper, and January 3rd, 2009, we launched this little monetary virus or this idea virus, and it kind of burns very, very low level for a while, and people aren't sure of it. It's a gimmicky thing, and it gets bigger and bigger and bigger, and we're waiting for Well, why would you need it? And you had to be a visionary to kind of need it or get it. If you lived in Argentina and your currency collapsed, and you remember the currency collapsing, or if you lived in North Korea, or if you lived in Africa and your currency collapsed and you watched your family get wiped out, then maybe you get it. But that wasn't the mainstream, right? The Western world is not run by people that lost their family's life savings in Africa or South America. So it was an interesting idea, but it was a fringe idea until 2020. And in 2020, the monetary inflation rate tripled in the US. And what we saw was in the world's best economies, you're losing 15 to 20% of your economic value in the currency every year. In the second tier economies, you're losing 30% or more. Like the Japanese yen is down 24% against the dollar in the last 12 months, right? And in the tertiary economies, you're losing 50, 60, 70% of the value in the currency. And that's where you get a Sri Lanka, where literally the entire government collapses, or what you're seeing going on in Africa and Zimbabwe right now, or famously in Lebanon, where people have been breaking into banks, taking people hostage to get their own money back because the government stole the money and the banks froze it, devalued it, and they're going to give it back to you over the next 17 years, devaluing it 20% a year while they trickle it out to you.
Here we have Michael Saylor, the CEO of MicroStrategy, a Bitcoin development company that has invested approximately $12 billion in purchasing Bitcoin. In one of his interviews, Michael elaborates on Bitcoin's decentralized nature and limited supply. The last 20 years have been a time of remarkable change, particularly in technology, finance, and, most notably, the emergence of Bitcoin. From the rise of the internet to the advent of decentralized finance, the 21st century has seen a surge in technological advancements. This includes the explosion of smartphones, the rise of social media platforms, and the growing influence of artificial intelligence. To Saylor, the most disruptive innovation of the past 2 decades is the emergence of Bitcoin and cryptocurrencies. Bitcoin, in particular, has sparked a global phenomenon, challenging how we traditionally think about money, governance, and the role of central banks. Make sure to stick to the end of the video, where Michael Saylor helps us understand the significant changes happening in the global financial system, and explains why Bitcoin, like any revolutionary innovation, is likely to continue evolving and adapting.
Conventional ideas like, oh, I'm just going to store my value by buying property, that's kind of broken in a lot of places. People are losing faith in just investing in property when you see the gyrations of this property. So what you've got is a lot of people questioning all their premises, and rising through that chaos is a new idea. And the new idea is, what if I can encrypt energy? What if I can encrypt money such that nobody on earth, no government can debase it, no corporation can steal it? I don't trust anybody. People don't trust governments, right? We're at an all-time low in public trust of institutions. It doesn't matter what government. And they don't trust companies. And why? For good reason, because companies are influenced by governments, right? Right? If you're in America, you're certainly not going to trust a company in China. And if you're in China, you're certainly not going to trust a company in America. And then, a lot of people that don't trust domestic companies, and the Europeans and the Australians don't trust American companies either. So there's a lot of lack of trust. So if I can't trust that, then what can I trust? Where am I going to put my money? We're in the middle of chaos. There is no place to hide. Your choice is, you could buy gold, but gold is dead metal and it's just getting ground into the dirt, right? I can seize your gold. Gold is the half-life of money, and gold is 35 years. And you can't put gold on 8 billion iPhones. So the problem is there's no tech in gold, and it was a good idea in the 19th century, and it's centralized. Governments can seize it, and the gold miners keep debasing it. They keep mining more gold. Right? In the best year, you get 2% more. In the worst year, someone seizes a bunch of gold, dump it on the market, you get more than 2%. So people are looking for a safe haven. What's it going to be? Property in Africa? Property in Venezuela? You can't have property in North Korea. Property in Argentina? A business? A business where? A business in Argentina where the currency collapses? What good are your cash flows if the currency that you generate the cash flows are collapses in value? So I think here's the big idea, really big idea. Everybody in the world has to decide where they're going to locate their family. They have to physically, they have to decide where they're going to locate their themselves in cyberspace, their mind. Are you going to watch Facebook all day long? Are you going to read Twitter? Are you going to be on YouTube? You're going to go to Rumble? Are you going to look at Instagram? Right? Where is your mind? Right? And then the third question is, where is your business? Are you going to run a yoga studio in Miami? How about a yoga studio in New York? How about, are you going to run a farm in Zimbabwe, a ranch in Argentina? Are you going to buy a company that has business interest in China? How about owning a bunch of businesses in Ukraine or Russia? And the fourth big idea is, where is your balance sheet? Okay, you're a podcaster on YouTube. Okay, well, you better make sure that you comply with YouTube platform requirements. Otherwise, they turn off your podcast and they crimp your business. That's where you generate your revenue and you generate your cost. But now, where are you going to save your money? Are you going to save it in U.S. sovereign debt? Are you going to actually store it in gold? Are you going to buy land? Where? In California, in Ukraine, in Russia? Where? In Florida, right? Are you going to buy S&P index stocks? Are you going to buy Bitcoin? Are you going to buy art? The answer kind of got confusing after 2020. The answer got confusing for a lot of businesses, for a lot of people. And so highlight of the year? The highlight of the year is people were stunned from March of 2020 to March of 2021. And from March of 21 through the middle of 2022, they're all starting to get their bearings. And they're like, well, I guess, what is Bitcoin? A digital commodity? You've got the government embracing crypto assets, saying we better figure it out. Congress, senators getting educated on it. The CFTC, the SEC, getting educated on it, big institutional investors starting to take Bitcoin positions, the media. Now you've got Bloomberg covering crypto, you've got CNBC covering crypto. And then from 2020, we started pouring gasoline on that flame, right? The gasoline in the US is we triple the inflation rate, monetary inflation. But forget about that. Maybe you're a blue blood living on the Upper East Side with a trust fund and you just don't see why you need it. The gasoline in Sri Lanka is everybody lost everything overnight. The gasoline in Lebanon is the bank freezes their doors and you lose all your money. The gasoline in Argentina is the peso goes from 20 pesos to the dollar to 280 pesos to the dollar in 4 years. Right, the gasoline in Ukraine is oops, there's a war. Banks are, there's a limit to how much money you can withdraw. And the gasoline in Russia is, okay, I get, the stuff you thought you owned in Europe, you don't own that anymore. We're taking that from you, taking your gold, taking your bonds, taking your yachts, taking your villas.
So, there you have it, Michael, sharing his powerful insights about Bitcoin and the paradigm shifts that have happened over time. Michael spoke about the evolving trends in technology and emphasized that growth and change are only constant. Saylor argues that Bitcoin offers a compelling opportunity for everyone. He emphasizes that sophisticated investors are actively incorporating Bitcoin into their portfolios. Bitcoin provides decentralization, security, control, ownership, and long-term value preservation. These features set it apart from traditional assets. Understanding these benefits can help individuals make more informed investment decisions and take better control of their financial strategies. If you enjoy financial content, please subscribe to our channel. Like, comment, and share the video. Anyway, guys, I hope you all enjoyed today's video and that it provided you with some value. I will see you all on the next one, and as always, all the best.